Hello and welcome to another episode of Talks with the TaxCop. Y'all, this is the 4th of July week. Independence Day was on Tuesday, whenever anybody is listening to this. Or coming on YouTube to watch it. I just want to say thank y'all for tuning in. So no, I did not post anything on Independence Day. Why, y'all? Because I was in Natville. I've been in Natville for like that Friday to Tuesday. Like, I needed some rest. You know, you ever been like your body tell you need to rest? I was in Natville, y'all, and I truly appreciate being in Natville because it made a difference on my energy, how I feel, what's going on in life. I'm trying to make sure I try to pick a time where it's gonna be too much noise, y'all. Yeah. So that's what's been going on. I feel kind of like I need a theme song of some sort. This is really the stuff that be going on in my head, right? Before we jump into today's topic, this is the things that be going on in my head. Like, you know, when you hear a song that you can't, like you hear the beat drop and you like, I remember how old I was, or I remember exactly where I was when it happened. Like, I need a funky theme song. Like, y'all gonna think this is crazy, but like Car Wash, right? So I remember the first time I heard Car Wash. I couldn't watch the movie, right? Because I was not old enough. But I remember when that beat dropped, I heard the song, right? So anytime I hear the song Car Wash now, and y'all probably like, really? Anytime I hear the song Car Wash now, that joint is so freaking funky. Like funky. Y'all, anybody who know, right? Like, that thing hyped me up. I need a theme song like that. So I need to get my producer, aka my son, aka my employee, to make me something funky like that. Like, when you hear it, you be like, I remember where I was. I remember what I was doing. Car Wash, making it do what it do, how it do what it do. I'm looking off to the side, y'all. I just gotta check some things. Anybody who's watching the video, y'all are like, why is she clicking on stuff? All right, cool. All right, so today's topic, we're going to jump right into it. Today's topic is one that's near and dear to me. And the reason why it's near and dear to me is because it comes up all the time. Like, I actually have a lot of people that are reaching out recently who have started businesses, are in the midst of doing businesses and trying to figure out what to do. And, you know, hey, I got an LLC. This is what I'm trying to do, but I'm not sure what I can do and what I can't do, and how I can make moves and the way I can't make moves. And I'm going to break it down for you. I know the people on the internet streets be telling you that you can write off, and yes, I did air quotes, write off everything. You cannot write off everything. You cannot. You can have legitimate business deductions for quite a few things, but not everything. Not everything, okay? So I want to talk about the secret sauce today behind all of this, right? So today's episode, we're going to call it Audit Avengers, Taming the Paper Beast, Record Keeping for Small Businesses. Like, I really want y'all to get this, right? So, y'all, I went to the library yesterday with the kiddos and the two youngest ones and picked up a bunch of comic books. I'm a comic book fanatic, right? Graphic novels, right? I do like graphic novels. I grew up reading Archie comic books. My brothers had X-Men and was collecting them and everything like that. Comic books are graphic novels. Comic books are very entertaining to me. I love to read, but like, you can get lost in a graphic novel, right? It gives you adventure. It's got colors. Like, it stimulates so many different things. And who doesn't like a great like superhero origin story, right? So y'all who are starting to pay attention, we're seeing stuff where I really am teaching people how to audit proof their businesses and their life. I really just want you to understand, me being a former auditor, not at the IRS, but just an auditor by trade, because we're all looking for certain things. We have certain rule books, we got certain guides, we have our criteria. Y'all know I'm big on criteria. I just want y'all to understand, if you starting a business, if you've been in business for a while, if you're rejuvenating your business, I really want y'all to understand the secret to it all. There's really one secret rule, right? And that secret rule, come close. Let me, on the video, let me zoom in. Come close. I need you to hear me and hear me good. Okay? Y'all close? Let me pan out just a little bit. Y'all close? The secret sauce is stop mixing your business and your personal. I'm going to say that again for the people in the back. Stop mixing your personal and your business stuff. So as soon as you're saying that I'm going to do a business, whether it be with your social security number, you create an LLC, you are S corporation, I don't care who you are. I'm going to tell you the rule number one you need to stop is you need to immediately look at, and if it's just you as a solopreneur, I get it. We all start out somewhere. I need you to stop mixing the two. I need you to look at them as separate entities, right? And it's not a fake it till you make it type thing. This is actuality, okay? I need you to look at separate entities. Anything that's business, you got to be able to measure what you're making. I'm going to say it again. You got to be able to measure what you're making, right? And you need to be able to measure what's going out. How you going to do that when you mixing your personal with your business? That's the golden rule. Why do I know it's the golden rule? I'm going to tell you why I know it's the golden rule. I know it's the golden rule because the IRS says that expenses for your business, those are them deductions we talking about, have got to be ordinary and or necessary to the operation of the business. I'm going to say it again. The IRS says that those expenses that you are deducting, right? Those your write-offs, those must be ordinary and or necessary to the operation of your business. How you gonna know what's ordinary and necessary when you put everything in the same gumbo pot? Now, don't get me wrong. I like a good gumbo. It's lunchtime. I would not mind eating something good, okay? However, we just not throwing any and everything up into the gumbo, right? Everybody gumbo don't taste the same. Everybody gumbo don't look the same. Everybody gumbo ain't the same consistency, right? But we know that the base is what the base is, right? And so therefore we need to know the basics so y'all can move out here in these streets. And so that's why we're talking about Audit Avengers, Taming the Paper Beast, record keeping for small businesses. All right, so let's jump into this. Why? Because I want you to be able to go into your rusty, dusty, handy, dandy tool belts, right? Go behind your cape, do whatever you have to do, right? And be able to use the right tools for wherever you are. If you're starting out, if you've already like in the teenage stage, if you're already like young adult, or if you in grown stage, just going back to making sure that people not being all sneaky and doing things they have no business doing. Now let's clear this up. What we do when it comes to what we are able to deduct on a tax return may not be the same things that end up being deducted per your financial statements. Why? Because the rules are a little bit different. Sometimes it's not that it's not showing, sometimes it's because it's not showing up on the business return. It doesn't mean it's not being counted. It may, depending on your business entity, okay? It may be showing up somewhere else on the tax return. So, for example, I'll give you the example of charitable contributions. It's a big one, right? That happens because I have a lot of clients that are S corporations or partnerships. Those deductions are legitimate deductions that show up on a financial statement, right? So if we're going to go get a loan or anything like that, and we giving them our financials, they look at our bottom line for profit. Our business expense may be charitable contributions. However, when we go to file that tax return, what happens is, especially if it's a pass-through entity, we are allocating those charitable contributions to the individual shareholders, and the individual shareholders then are deducting them, those expenses, right, on their personal tax returns, and are not deducting those expenses on the business entity itself, right, on the business return, the S corporation or partnership return. So it's those nuances. That's why you got to know who you're working with, who understands the rules based off of like knowing record keeping, knowing accounting, knowing tax entity structure, knowing infrastructure for tax laws. All of that stuff is critical, but it don't make no difference, none, if you don't handle this first rule. And this first rule of thumb, 100%, is don't be mixing your business and your purse. Like, I don't know how many times to say it. I don't know no other way to say it. Stop rolling in the bed with all the stuff. Like, keep them separate. Keep your day clothes separate from your night clothes. Don't mix all the ingredients in the pot at the same time. Stop commingling, people. Just stop it. Change your mindset. Speaking of mindset, I want to tell people, like, one of my favorite books that I've, like, you're going to be like, oh, she's going to say Rich Dad, Poor Dad, right? So I am a Rich Dad, Poor Dad, like, connoisseur. Like, if you actually went to go see, like, at one point in time, I swore I bled purple. Been to a Rich Dad conference, owned 2 cash flow games, have taught cash flow for kids. My husband and I have taught cash flow for kids at church back in the day. Are teaching our kids how to play the game. Like, really, like, I believe in the principles that it teaches. Sit around here, my husband be like, yo, we try to play cash flow in real life with real money. Get it. But I will tell you, out of that series, for me, the most significant book out of the series, and there's a lot of books in the series, and yes, it is repetitive, book 2. And I'm not getting no cheese from this. Like, Robert Kiyosaki and Kim Kiyosaki, they don't even know I exist, right? Book 2, to me, is the foundational piece. It's the cash flow quadrant. Why? Because it opened up my mindset to how we operate. Really, like, so I say that I do have an accounting degree. I've been running businesses for 20 plus years. I actually worked for somebody for 20 some years, right? Before I decided to go out on my own and do this full time. But I was running these businesses the entire time, and it's not just the tax business or the accounting firm business, right? It is actually, I do fitness. I'm a fitness professional. Help restructure my husband's business, my husband's a general contractor. I've just, like, there's ways that I've always been trying to leverage stuff because I know that the tax code is built for entrepreneurs and investors. I know this for a fact. Like, it's not a game. I know who it's built for. I've been in love with the tax code since I was in college. I got my master's in taxation. I actually was watching a video last night that I recorded 12 years ago on July 5th, talking when I was getting my master's. And I was just randomly started spewing out because I was taking a break from studying my corporate tax book, right? So absolutely, like, y'all see some books in the background and kind of blurry. Those are tax books. That's from me getting my undergrad, my international, my business 1 and 2, my entities and trust, my individuals. Like, I really enjoy the tax code. I really do enjoy the tax code. And I enjoy the tax code so much because there's so much built into it. Now, it's a lot, and I don't know everything, but I do know how to use my resources, and I do know how to research to figure out how stuff works for my clients. You have to be able to know how all of that works. I go off on a tangent to be like, mindset, right? It makes sense. Mindset. All that cash flow quadrant, when it tells you where you reside and you really figure out where you are and where you want to be so you can get into a new quadrant, all of it was based on, okay, yeah, but in order to do that, in the back of my mind, I always said, how do I keep it clean? How do I keep it above reproach? And that's possibly because I am an auditor by trade. And I know if somebody asks you some questions, you're going to have to be able to support how you got to that decision. You're going to have to. You're going to have to. You're going to have to recreate, and let me tell you this is what auditors do. You're going to have to recreate how you came to your conclusion so a reasonable person get to that same conclusion based off of what the criteria happens to be. I'm going to say it again. Based on what the rules are, we're supposed to all end up at that same conclusion. So you're going to have to be able to do a great job of documenting what your conclusion, how you arrived to that conclusion, what steps you took, what processes you took, what things you looked at. And record keeping is critical for that. Documentation is critical for that. Understanding that you did not mix apples and oranges together because you had no business commingling is critical. So I tell you rule number one, and really the golden rule in business when you're starting out, I don't care what it is don't mix personal and business. Just don't do it. Even if you gotta like had a money in a box, because this is business, right? Or which is what I did, was I opened up a separate account in my name, because I didn't start out with an LLC. I knew, right? I do know you should to do asset protection, but when I first started out, I just had a separate business account. I had a separate account with my name, so it was personal, but my household account did not mix with my business account unless I was giving money, right? So making investments into the business, giving contributions depending on the entity, right? I was making investments into the business. Other than that, because I needed to see what was going on, because I needed to know, like I would give myself a period of time to figure out if this business was going to work for me or not. Y'all, I did Beachbody, and Beachbody won't making me no money because I didn't push it the way. It's not because I didn't know what to do, because I wasn't pushing it like that. And I would have months that I had a period of time I was like, oh, I think I can do this if I give it my all. I was making a little bit of money, but I could see what was going on, and I made those decisions off of that bank account, that spreadsheet that I was using to track expenses versus income. And so that's what I want you to understand. Everybody's like, well, do I got to keep every receipt? Do I got to scan every single thing? Look, I'm not going to tell you not to know where that stuff is. What I am going to tell you is make sure that you can distinguish between what is personal and what is business, and how you are doing that, and why you are doing it that way. Okay? So I need y'all to understand, right? Why having good record keeping, why this foundation is so key. Why is this? Because good record keeping is like a GPS for your business. You're not going to end up lost in these financial streets. And as I said, you'll be able to make decisions as to, am I going to ride this out? Is my heart in this to stay in this a little bit longer? Or do I need to pivot and go do something different? Because even though the only person right now I can use is myself, even though I loved what Beachbody stood for, and I loved Shakeology, all this kind of stuff, could I see myself, and people were making money, right? And people still do. Could I see myself really going out here hitting it hard, being a Beachbody coach and trying to convert everybody, versus in that same arena I ended up stumbling into being a fitness professional, right? Actually teaching live classes, and that still did the bug for me. It got the fitness thing, because it's where I learned, oh, you really do like this. But you like being in the class, and you like the energy, and you like feeding off people, and group exercise was your thing. And the energy you got to bring to the room, and how you got to feed off of everybody else's energy. When you decided you were going to the gym, you always gravitated to the group X room. Those things were like, hey, I can stay in this space. And I'm not saying that I don't like fitness, but maybe this is not the route I'm going to go. And it wasn't. Like I still held on to it for a while. I still actually have a Beachbody account, but I don't push it like I was pushing it at one time. But it was a segue for me to be like, okay, what do I want this business to look like? What aspect is going to give me the things I need? And am I keeping track of all of that? All right. So record keeping, being in charge of that, understanding and keeping it separate from my personal, helped me realize, hey, baby girl, you might want to pivot, and you might want to handle this a little bit differently. All right. So that's number one. Decision making. It allows you to make good decisions off of financial information. Now, in most cases, we always in accounting are working at least a month behind. So we got a period behind, and we can make those assessments off of that. But you can still run stuff to be like, okay, what's going on? You got tools to be able to run it in financial statements, etc. What's happening in real time? What happened this month? Where do I see that I'm spending stuff? How do I see that I'm making these moves or not making these moves? All right. Second, financial health analysis. It keeps you on track, because it's like give you a regular checkup. We call this in our industry key performance indicators, right? So it'll let you know, you can look month to month and determine, woo, like for instance, for me, I know August is going to be a heavy spend month. February, March are heavy spend months in my company. Why? Because it's renewal of software for me. And software is very heavy, right? My tech stack pretty deep because we got to run off of tax software and make sure this is protected and that's protected, and we do resolution and we got accounting and has this been renewed. And so my tech stack is pretty deep, and I've added some other people to the team to help me from an IT perspective to make sure that I'm structured correctly, right? So there are certain subscriptions and stuff that I pay them on an annual basis. They end up renewing around August time frame and February, March time frame. And I've done enough. Yes, I've only been full-time 3 years, but I've done enough analysis and comparison between periods of year or quarters or whatever to realize what's going on. And because I was able to run those comparisons and I did not have my stuff mixed together, I did not have my personal mixed with my business, I could make those decisions and be like, okay, so we got to front load how we do stuff. We got to actually understand when we need to make sure we have enough money in the bank, or I'm gonna tell you the truth, or the credit cards are clear so that you can actually make those large purchases at them time frames and turn around and pay them off so that they're clear again, y'all, because I'm about my points. I ain't gonna lie to you. I'm about these credit card points. I'm about getting cards that give me, I'm for the twofers. Wherever I can get a twofer, right, I'm gonna get it. So I'm going to leverage my credit cards that I do have for the business so that I can get as much as I can get with them credit cards. I'm not going to tell you that I don't play this using credit card game. I do. I leverage OPM, other people's money. But I always have a game plan to pay it back so that when I need to leverage it again for those heavy purchases, I'm not messing with the capital, because I do have a team. I have people I pay. I have some people that are actually working in the company, and then I have people that I'm outsourcing with. So I got to pay their invoices. Speaking of invoices, this is 6. I got invoices I got to pay, as well as I have clients that pay me. So we got to make sure that churn rate is doing what it needs to do. Hopefully that makes sense to you all. All right. And you want to stay compliant. Why? I led with that first. In all honesty, we don't want the IRS to come up in here and tell us you are disallowing this, that, and the other, or you don't want your state comptroller to come in and tell you they're disallowing X, Y, and Z. Why? Because they'll do it. I've seen it happen. I've seen them look, and if it's semi-seem personal, they'll disallow everything. We're not going to comb through all of this. They're going to ask you to give them a tax return. They're going to ask you to give them the supporting documentation that was used to create that tax return. They're going to turn around and ask you for your bank statements or your financial statements. I try to keep them at bay. I'm trying to tell you, right? Hey, can I give you this versus this? If the financial statements look weird, they're going to ask for they're going to be like, give me the bank statements. They're going to start looking at them bank statements. And when them bank statements start to show personal more so than business, they're going to be like, I'm not looking through 12 months worth of bank statements. I'm going to say that you're commingling. Yes. And I'm going to start disallowing a whole lot of stuff. And I'm going to look at the financial statements and be like, you said this, and this. They may tell you, right, especially depending on what type of audit they're doing, they may be like, give me the transaction detail behind certain line items. And if they ask for it, you got to give it up. And then they may ask for the bank statements or credit card statements associated with that. You do not want to be playing with these people in the streets. Just don't do it. That's why my rule or my secret to it all is do not mix business and personal. That's the number one rule. Don't mix business and personal. And so how do you tell yourself, or, well, Patrice, how do I know if it's ordinary or necessary? You ask yourself a series of questions. Is this something that's reoccurring and primarily used for my business? Right? Am I doing Canva is a great one because everybody's doing social media graphics and stuff like that. Well, I started out with a free account. Okay, but you're primarily using it now to promote your business, or to come up with covers, or to come up with flyers, or to come up with this and do different graphics, or then get you a business account. But if you do stuff and you want to play on your personal side, then keep the personal one and go get you a business one and have your business pay for it and do the annual subscription, right? That way you know, and then have that come from the business account. What part of, like I'm saying, hopefully y'all get this and y'all understand. This is why this is my go-to, because you want to be in compliance. You don't want them digging through your stuff. And if they do dig through your stuff, you want to be ready. I'm going to give y'all an example right now. I'm getting ready to, we actually received a letter right before the holiday for one of my clients is going through audit. And it's at the federal level. I've had clients go at the state level, do hearings and stuff like that, but it's at the federal level. And the client said to me, they thanked me for preparing them, because I told them when we was doing everything and we were building the return, and when we amended the return, I was like, I want every piece of documentation, because to me, this could be flagged. And if we are ever flagged, I want us, right? IRS, when I say flagged, I mean IRS audit us. If we're ever audited, I want to have all the documentation in my possession so that we can work through this. So I know what I did to create the return. I know what conversations we had because I've documented them via my secure portal. I have the documentation. I know what was created. We went and pulled transcripts from the IRS so we can make sure that we are concise. And I went and got, so I need certain type of documentation for this person, for this type of transactions. Give me this type of report, because they could come back and ask me, and I want to be able to say, oh, here the documentation, and this is how I came to that conclusion. I even wrote myself notes, and I explained to them why I had to amend the return, because I looked at it one way initially, and when I went back and looked at it the second way, I was like, yo, okay, my calculation was all, let's put it together this way. I have my methodology behind it. Why? Because I audited for 20-some years. And I know that I'm like, okay, when we do our work papers and we use our methodology, that methodology is detailed. And anybody who's worked with me know my methodologies will be detailed and cross-referenced. Step 1 was this. Step 2 is this. Step 3 is this. Step 4 is this. Step 5 is this. Because I want to draw that person to the same conclusion by following the exact same methodology that I used to arrive at that conclusion. Now, we can disagree, but I'm going to say, well, did you use my methodology? Here's my methodology. It's outlined. This is the methodology I use. This is how I came to the conclusion. Teach me. I don't know everything, but this is what I use to come to this conclusion. And if I'm off, tell me where I'm off and what you're going to let me have and what you're not going to let me have. That is the way I'm attacking this audit, because I've been on the audit side, and as I'm working with my client and working with the representative from the IRS, that's exactly, my methodology is already documented. I already have the source documentation. I know how to outline it to be like, all right, this is what we're going to do. This is what we need to. And this is, they do want to do an in-person discussion. I'm prepared. I'm not anxious. I'm not nervous. I've already spoken to the client, and the client has said, you know what? Having you to go along with me on this journey puts me at ease, because you prepared me for it a couple years ago so that we would be good. And you explained to me at that time why you were doing it this way. That like brought tears to my eyes, because that's what this is. This is why I do what I do, right? Because I've done it from both sides, and really is educating and empower people, because I don't want them to come after. I don't want it to be a hearing or anything that shuts your business down. If you owe, you owe. We're not going to play that game. But there's enough legal loopholes in the tax codes for us to play the game correctly. We just got to know what the rules are. Okay? All right. So that is me at the first part, right? Why we really need to do it. The paper, getting over the paper, and how much do I got to keep, and why I need to keep it. Y'all find a way to keep it at least three years in some way, shape, or form. Be prepared. This is why I like to do bank statements. This is why I use credit cards and stuff like that. Like, the receipt, here it is. Now, if it's itemized, depending on where I'm going, so let's say Give you a great example. I go to Costco, or I go to Sam's Club. I don't really do BJ's, or let's say I go to Target or something like that. I split the transactions. I use a little black ball, right? So when I go in there, I split the transactions. So what's personal gets paid out of my personal account, and what's business get paid out of their business account. I do the same thing with Amazon. When I'm doing Amazon purchases for my family, I use my Amazon personal account. When I'm doing Amazon purchases for my business, I use my Amazon business account. That stuff itemized. They'll show you the orders, exactly what I did, how it's set up, like when I got the monitors and everything like that in this office, when I'm doing a lot of stuff, when I'm buying business books or cheat codes to remind me, like, okay, what's the calculation for this? I'm buying that stuff off of Amazon Business because it keeps the record for me. And before I make the purchase, I think, before I swipe anything, I'm like, wait a minute, is this business or this is personal? I do the same thing at Best Buy. Honest to goodness, I do the same thing at Best Buy. Like, wait a minute, what we buy? Plus, if I ever want to return anything, this is another reason why I use the credit cards and stuff like that. If I ever want to return it, I have that information. I'd be like, hit this card. Wait, which card did? Or if I'm going, I don't have a receipt on hand because the ink be going off and I didn't necessarily take a picture. Which card did I use? This happens to me a lot at Target. Which card did I use? Oh, that was a business transaction. I remember what I bought. Boom. Okay? That seemed like a lot. All right, but we not done. Here we go. Here's my second point. You know, those are sub points, right? We talked about the significance of record keeping. It helps with decision making. It lets us know our financial health analysis, and it allows us to stay compliant. Point number 2, the IRS gives us recommendations exactly for what we need to do for record keeping. They give you a cheat sheet. Come on now. They tell you what to do. In plain English language, not in IRS language or government ease, we're going to talk about it, right? It allows you keep them coming, keep them going. What I mean by here, the IRS wants you to be a document hoarder. And if y'all saw my office, y'all be like, oh, that's our problem. That's what you see all this stuff behind. Why she got all that space? I thought she was going to clean the bookshelf. I am going to clean. I'm going to get the kids to clean the bookshelf, and I'm going to pay somebody. Employees. That's why my kids on payroll. Okay? You want to hang on to those business records, like I said, for 3 to 7 years, depending on what the document is. Us auditors, we love a good paper trail. And make sure your accountant that you're working with got a good methodology as to how they got certain stuff on that piece of paper. I'm just going to tell you, we like to follow the money. So as much documentation or transaction detail we have, as long as you can support it, you be like, do you know what you bought? Like, even in some of your accounting software, I went to Best Buy, you can do memos. You can scan the receipt. So the detail is there. I bought this and this and this and this, and then I reimbursed myself for the apples because I know I needed a snack, but that's not a meal. Okay? Document dance. Really, it's the matching principle. All income, this is an accounting term, all income expenses need their dance partner. If the money came in, there should be an invoice or something showing, or contract or something, what triggered that money coming in. If the money went out, you spend it on something, there's some sort of receipt or purchase order or something exists to match that thing up, so that they can dance with their dance partner. Anybody who watches this video is like, what in the world? So they can dance with their dance partner and they can get it in. All right? And you want to know what that stuff is. I'll give you an example. Great example, because I have this a lot with some of my accounting clients, my business accounting clients. They have loans. EIDL, car loans, loans from QuickBooks, LendingTree.com, whoever. And I'm always like, I need the documentation because I got to split it. Because information on there impacts different aspects of the financial statements. You have a liability for the loan itself, but part of that is paid, right? We know principal versus interest. Well, interest is the expense. I cannot expense the entire, unless it's all interest, right? Unless it's all interest, I cannot expense the entire thing. I have to take the interest and allocate it to its proper financial statement, and the principal and allocate it to its financial statement, so we can reduce that liability. You want it to reduce, because when you go get these loans, they got to be like, well, what is she doing? Same thing for credit cards, right? Because part of it is interest, and part of it is we paying it off. If we paying it off in full, but if we carrying it, we got interest. So what part is interest versus repaying for all the principal? It's got to be a match to it. Everything got to match up, and it got to match up clear. And so you really want to know this going into it. So I'll ask my clients, okay, we're doing month end, we cleaning it up for month end now. And I'll ask for, not only do I want your bank statements, because I got to reconcile on a monthly basis so we can make sure we're in line. Not only do I want your credit card statements, but I also need any loans statements. I need any car statements. I need to break this stuff out clearly between principal and interest, and then I attach it. Why do I do that? Because some days I'm sharp. Some days the team is sharp. Sometimes I got to check what's going on, and I like to check and be like, that look a little bit off. Why is it off? This is why it's off. This is why it's off. So I go to the source document. I'm always be auditing, meaning checking to make sure that we good to go. Always following the money trail, so that when the people come to ask me the questions, even though my body is going to actually, my heart going to palpitate, I'm going to get nervous, I'm going to get anxious, I'm going to be like, do we really got to do this? I'm going to have to get on the phone and that, you know what I'm saying? I'm going to go through all these emotions. I'm going to be prepared. And I'm going to be able to clearly distinguish that what happened in the business was solely for the business. And what happened personally did not get in bed with the business. Or if it did, I allocated it accordingly, right? And did not make it an expense that was going to reduce what looks up on my tax returns and things like that. Maybe pay less in taxes. I'm not going to tell you sometimes it don't happen, but we need to account for that. Some of that stuff that's personal, it is on the balance sheet on owner's draw or distribution or a dividend. It's got to be documented correctly. If it ain't a ordinary and necessary business expense, just because you did it doesn't mean that should be over there on the profit and loss statement or your income statement. Okay? Let me know if I'm confusing y'all. Send me a comment and be like, whoa, she got technical. I hope I'm breaking it down so it's palatable. That's really what my goal is. All right? You want to stay in the loop. Tax laws change like people change their underwear. I'm not going to lie to you. That's why I be like, whoo. People be asking me stuff, and I be like, in October, they going to kind of set it in stone. But I pay attention. I do all my continuing education during the summertime, and then I listen to the streets really, really hard in October, because that's when Congress or the states and them be changing their mind. And then even up to January, beginning of February, the state's still confused. So I'm reading, okay, what changed? What's going on? I have some great tools that I use to be like, okay, what changed since last time? What's going on? Do I need, okay, this is confused. Let me go take a course in this. I don't mind going to get trained so I understand what's happening. I don't mind training my team so we understand what the laws are. I'm going to read some criteria, honey. I'm going to read it. And because they change so frequently, we got to make sure that we keeping the right things tidy. And we keeping all those things together that are really supposed to be together. Okay? The IRS tell you exactly what you need to do. They actually have on their website, they actually have a play. Okay, keep these tips and tricks in mind when it comes to record keeping. I tell y'all, the IRS a gentleman, honeys. The IRS is a gentleman. He not rude. He not stalking you. He really wants you to do well. Why? Because they don't want to do all that work. They don't want to. I mean, they do it, but they don't really want to. They want to send people out in the streets and stuff like that. They'll send you a bunch of letters. They know you ain't going to answer it immediately. That's a whole nother topic for another day. We'll talk about how to get yourself out of a problem and what you can do. That's a whole nother episode. All right? So let's talk about best practices for record keeping. Truly, I want you to be prepared for your best practices for record keeping, because I want you to be successful. I do. I want you to always be winning. So, rule number 1. Do not be mixing business and personal. Y'all gonna be like, how many times she gonna say? Don't mix business and personal. Don't do it. Do not. Do not. Don't even think about it. And if you have, go talk to somebody who can tell you, okay, well, how do I unmix them so that I'm not improperly counting them? Because if I am audited, I want to be able to justify. Okay. So rule number 1, get you a system. It don't have to be the latest and greatest software. It could be a spreadsheet, but get some sort of system and be clear that it is not personal sitting in that business stuff. And you need to know how that system works, because you may be the person that either has to work with a tax professional to help you when they come a knocking, or you may have to justify it yourself. So you need to know what system you put in place. I want everybody to know it's okay to make mistakes. It's okay to not know how to do it. But I'm going to tell you, a good auditing will get you to tighten up some processes and procedures really quick. You can't use ignorance forever. It's a lot of information out here, and it's not a good thing to consistently use ignorance as your get out of jail free card. They ain't going to immediately take you to jail. But they're going to be like, oh, they used that this many times. I recorded it the last time they told me. They ain't know. Their sympathy going to go away. The empathy going to go away. So get you a good system. And I'm not telling you to go. Like, there's some wonderful apps out there. I'm not being sponsored by nobody, right? I am a QuickBooks Pro, but I'm not being sponsored by nobody. There's some great software out there that are tools. But if you don't know how to use them, go get some training from an accountant. Take the time to pay somebody to train you, or take a course. I'm not bull jiving with y'all. I really am not. Go learn how to use it. Why? Because the tool is based in accounting principles. And you could have, let's use the gun as an analogy. All right? I can have a gun all day. I've gone to handgun training. I know to lock that thing up. But when an emergency happens, I'm really supposed to do it. If I don't go to the range and exercise that muscle, I will either freeze up or somebody will get hurt. The same thing gonna happen here. Right? Just because you got it and you think you know it and it's got AI and it's telling it what to do and where to go, don't make it right. It don't make it right. And if you don't know how to use the loaded weapon, aka the accounting software, to produce what you needed to produce, ain't no shame in going to get somebody that can help you or get some training. So that you ain't stressed out. And if it's stressing you out, go find somebody else. Outsource that joint. It's people like myself who absolutely love doing what we do. Who love figuring out and taking courses and figuring out the tax law changes. We here. This our thing. Don't get me to cut no grass. Ain't gonna do that. Don't get me to do no whole bunch of dust. That's why I got my kids. I got allergies to dusting. But helping you to solve problems and figure that stuff. It's people out here who love to do this. We out here. Okay? Number 2, consistency is key. Make record keeping a part of your routine. Just like you brush your teeth in the morning. Just like you got you an exercise routine. Make doing record keeping in your business a consistent thing. And if you're not going to do it, go find somebody to help you do it. Teach your kids. You might have a kid who make it a game. All right? And then in this technology age, because anything can go left, get you a backup. Backup. Just like the rule in auditing is document. Backup. Have you a way to recreate that stuff if anything go left. Right? Export that stuff out. Do whatever you need to do. Make sure you got a way to retrieve it. Because if they come a knocking, you want to be able to be like, okay, I got to get to it. Okay? That's what I got for you all. Hopefully, this has been long overdue for me. Hopefully, we talked about 9 different things. We really did, right? Main points and then sub points. Main point number 1, why is record keeping important? Why? Because it helps with decision making, gives you good financial health analysis, and it helps you to stay compliant with the state laws and the federal laws. Okay, the IRS is your friend. I keep telling you this. IRS has recommendations for record keeping. They whisper sweet nothings to you, and they tell you that you need to keep track of them documents. Keep them coming, keep them coming, keep them coming, right? Keep holding them things for at least 3 to 7 years. You need to be able to dance with them documents. They need a partner. Everybody need a partner. Everybody need to grab your partner. Don't sit. I don't know how to do all that, right? Even though I lived in Oklahoma, right? So all income is driven by something. So you need something that triggers that and some support for it. And all expenses do the same thing. We want that match. We want that match. We want that match. And stay in the loop, or work with somebody who is staying in the loop of the tax law changes at the federal and state level. And you got to have some best practices for record keeping. You need to have them. Why? Because it's necessary. Why? Get you a system. Be consistent. Right? Get you a system. Whatever your system is, ain't going to be no judging. Be consistent and always have a backup of that documentation. Because if ever needed in that 3 to 7 year period, you're going to want to be able to get your hands on it. All right, so I told y'all, Audit Avengers, you got your squad. It's not exactly like the Fantastic Four. We're going to call them the Fantastic 3. I don't know if I can say that. It's the Fantastic 3. The top 3 things you got to have. No, it is 4. Because why? Number 1 was... Y'all say it with me now. Do not be mixing your business and your personal. Right? We taming these paper beasts. You like, why I gotta keep somebody come to my office and tame this paper? That's all they know. Put it in the box so we can get the people to scan it, do all that. The printer sit right there. I ain't gonna lie to you, I love my good printer just in case. My eyes ain't always the best. I do have these big screens, but Lord knows, I like to mark up a good piece of paper. And then Miss Haley Dandy, Remarkable sponsor me. This Remarkable get it done for these PDF. If I gotta concentrate and highlight, make notes and figure it out before I go into toe to toe with somebody, it allows me to do it. Get you some tools, people. Know that you're not in this by yourself. And if you're uncertain where to go and this still didn't answer your questions, know that you can always book some time with the TaxCop by going to our website. You can either go to TaxCop.com or you can go to our firm page, Total Tax Experience. We do not have, I'm telling Eric, we do not do free consultations. We don't. My team does do a free discovery call so that they can point you in the right direction as to what type of meeting you need to set up. But when you're talking to me, I'm not talking to anybody for free. I will do a paid consult with you all, but I will make it worth your time, your energy, and your money. I want to know that you're just as invested as I am to give you what it is you need for your specific situation. I noticed kept this at a high level. It may have ran kind of long for you today, but truly, truly, truly know that if you go to the TaxCop.com and you schedule a consult with me, I'm going to give you everything I got in this. From my 20 plus years of experience out in these streets doing it, from being an auditor and know how to maneuver. Remember, just because I did not actually audit from the IRS don't mean I don't know audit stuff. I have been on the other side having to represent clients, right? And I do know how criteria and stuff work because I did it for the Department of Defense and the in their Office of Inspector General and the Department of Commerce for 20 plus years. Auditing is auditing is auditing. The rules and the things that we have to go by may differ a little bit because of the agency you're working with, but we all got we got our ethics and we embedded in some foundational principles. We can solve the problem, and I'm gonna tell you, knowing the criteria, knowing the methodology, knowing the stakes they're gonna take helps a lot. And I do know how to make those maneuvers. etc., to be able to assist people. I love to help people. I love to pour into people. I want to see you successful. In reality, that's really why we're doing this. I want to see you successful. I do got to get some people on the calendar for interviews, because that's more exciting. I love interviewing people, right? Versus these foundational principle type podcasts. It's like wah, 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 wah. But I do want you to have yourself set up for success. And so I get this question a whole lot. I just started a business. I want to make sure I'm doing stuff correctly. Don't be mixing your business and your personal. Don't. It'll make it easy from the start. So figure out if it has a business use. And then from there, after you ask yourself a series of questions, it'll help you along the way. Be consistent. Have that backup. Get you a system. Understand why you need to do it. Look at it often. Look at your numbers often, because it will help you make those decisions that you need to be made, and work with somebody who's staying in compliance with everything that's going on top of what's going on. All right, that's what I got for y'all. Another episode in the back. I feel like I really need to work on my sound system. Let me see. I don't have no horn. Another episode in the bag. I'm gonna do it again just because I'm petty like that. Another episode in the bag. I'm grateful for you to take the time. I pray that you've listened to it all the way to the end. I'm looking forward to another episode with you all. If there's any topic you got any questions about, anything that's coming up that you kind of curious and want to hear an episode on, leave it in the comments. Please leave it in the comments, either on YouTube, leave it wherever you listen to these podcasts. Let us know that you're out here. If you got something that you're interested in hearing, if there's somebody you would like for us to see if we could interview, let me know. And I'll see if we can try to make it happen. Glad to be able to serve you in this manner. For some of y'all that only listen, thank you, thank you, thank you. I'm grateful for you listening. For those who have watched the videos on YouTube, thank you, thank you, thank you for watching the videos on YouTube. We're going to get a little bit better. My background going to get, we working on it. I know I keep telling y'all that. We're going to work on it. And until next week, peace.